Hey guys, how are you? Yeah, Market Sniper coming at you across the channel. So 17th of December, we just said, beware, the precious metals is due to resume. We're also tweeting out, almost on an auto tweet once every 2 weeks, the fact that we've called for an overall macro bull in precious metals. So your bias should be net long. We made our second interims in these moves up here, and we called for the gold at 1350 and said we are now in a secular bull market. At our second interim, we rested and we've been pulling back, and they've been forming falling wedges as I was describing in this video. By the way, like, subscribe. Thank you for all you've done this year, bringing new subscribers. If we continue to grow the scale of the channel successfully, I will put more videos out. So help me help you. Let's do that. Anyway, so with this nice move that we got on both gold and the silver, I've actually stopped the video on the silver chart because I prefer the slightly higher beta of silver because we're chasing the aggression. I'm comfortable with the increased volatility that does in fact go with that. Enjoy the wind through our chandelier here in the background, in case you're wondering if something's being broken. No, it isn't. Nice warm day and we're getting a lovely breeze. Anyway, so the falling wedge was at this state, and we put out the video and said it's coming again soon, guys. We're going to reassert the value of falling wedge. Well, you'll learn, if you elect to learn, that our particular method is focused on volatility. Wedges are close related to the Hunt volatility funnel idealized setup, and we also do study now on broadening patterns where there's an expansion in volatility, and we started to define this. So this content's now being recorded and is being made available to our premium members, of which you could become part for the new year. Remember, 2020, what are you going to do different this year? I mean, I woke up and we're across the number of platforms, a few thousand up as a result of that silver re-engagement. You could be achieving that too. And what surprises me is that people don't have money for growth, learning, and community. It's too precious, it's their capital, but they will blow up capital repeatedly 3, 4, 5 times, blowing up 30%, 40%, 50%, even 70% and 100% blowouts. You've got to remember, if you can put an end to blowouts, money management is and blowouts, which actually is not just failure of money management, there's a lot of psychological aspects that tie into it that cause common errors, such as compulsion to trade, such as impatience. These are maturity-based errors. Also, there's conceptual understanding errors. We study all the things where things go wrong, and we teach ourselves how to develop patience, how to wait for the key moments, when to get in and when to get out, when to leave one market, keep a watching re-minute, and go somewhere else. And that's truly valuable. And unfortunately, people, they get habitual. They pattern trade, they repeat habitual things, and they stay stuck on one market when it's no longer the time to be. You only have to look at Bitcoin chasers. Sometimes, every time it's got to be a trading market. Sometimes it's do nothing. In fact, most times, most markets, the safest trade is do nothing. You want to be selective to those highest probability based events and getting in at key moments. This is the difference between a sniper and the man running around the jungle and spraying his Uzi. Grab the mini series in the notes below if you haven't already. Book a call if you decide you want to become accurate in your trading for 2020. It may be the time. If you're thinking about your finances and how we treat trading as part of a tool of wealth building as a whole. This is not entertainment seeking. It's not dopamine seeking. It's sustained wealth building with managed small losses and disproportionate asymmetric rewards. Anyway, back to the gold and silver. So this was a call point, putting everyone on red alert. Now imagine you were getting these, we calculated over 500 updates in the past year for my guys that are mini vids, usually quite short, not as lengthy necessarily as these YouTubes, but getting just 1 or 2 key points over as the market is prevailing, potentially on big days, 2, 3, 4, 5 in a day, and then on some quiet days, 0 and 1, depending on where we're looking. And you're missing some of this. We gave you this as a free view in YouTube. Hopefully this is a gift that will have paid some of you and that you've taken some green out of the market. I seriously hope for your sake that that's the case, and we'll see you in premium at some point in the future. I have sought to do this with varying success sometimes. We get some right, we get some wrong, as is the nature of the world. But the key thing is the ones you get wrong, you lose 1 unit. The ones you get right, you should be getting 3, 4, 5, 9, 11 times the reward, and that's the key element. Anyway, so that was the X marks the spot for XAG, which was my chosen preference on this video from the 17th. We're putting everyone on red alert. As I say, we specialize in analyzing constriction volatility events, and that is the real juice. People get hung up on support long-standing Bitcoin trend lines where, you know, 2 of the points you've already predetermined yourself. So there's one other event where there's a touch and they think that's going to hold forever. You can draw tons of trend lines that are continually being run. Key levels of significance are horizontal lines, they're price points, and the key best point to trade is when there's going to be an explosive move and you can get limited risk. That's as simple as I can put it in terms of trading psychology. Anyway, back to the precious metals. Let's look at silver today. So that was 17. We are 24th. You guys will be eating your Christmas pud today, and that's how she looks today. And that's what you missed. And that's what you want. A key tight stop just under there. We actually got it even tighter. If you drop time frames, there's structure in there. In our group, in the premium group, we did exactly that. So we had an even tighter stop. You'll find that the stops will be right around there. Very, very tight. Barely under 17, and you could have been a buyer barely over 17, literally at the 17s, and it's trading 17.5 today. That's a good move. You can get decent leverage on this, not in crypto terms as it's a substantial percentage move, but in a normal traditional markets with better leverage availability, that is actually a very good point to have got in. I did a chart for it, and I've tweeted it out. Follow at the Market Sniper, where we magnify and have a look into that place. So hoping some of you also got a few thousand in various accounts for getting into silver, and that's putting you in a good mood. Don't go blow it all on conspicuous consumption in Christmas. Children love you for the time that you give them, not the amount of pieces of plastic, molded plastic that you buy them. Just give them time, attention, and love, and that's where you need to be. That's my general personal finding. That doesn't mean don't be generous, but also start thinking about how you manage your money. Are you living within those means? Have you paid off that debt? What are you going to do different this year? Are you going to be saving into your Stuff You portfolio, the control structure winners? Are you going to be saving into your gold, and are you accumulating this as well as trading it? And are you going to be saving into crypto? And are you doing leverage trading on those 3 asset categories? And are you doing super leverage trading at key moments such as this, where you are having a fixed loss, but you could get an outlier gain that you could tax into your investment and your moderate leveraged accounts? This is the kind of thinking you should be having. You should be putting money every month away and paying yourself, so that each month you're taking a step forward. This is the time for thinking that. We can play a role in that for you, but it's your decision to make. Book a call below if you're getting serious about that. And this is silver and gold. Let's see how far she goes. I'm suspecting that we could see 18s up to 19s even here before maybe we'll rest. So if you want a scenario of what could come next, it's not the highest probability. We could just jack right past and do all-time highs, but I'm thinking the control structure won't like that too much. Disorderly increases in gold and silver in the well-informed is not appreciated by the Fed and the rest of all the chief satans. So I would say there's likelihood we'll revisit around the 9s area, and then you could in fact have a little bit of a relaxing again as we start approaching that blow off high. That was 19.6 up top here. So where do I see it? I see it maybe going into the 18s in terms of before it taps out, and you'll see from there then maybe a bit of a drift down. In terms of that, possibly another wind up for further upside. So what I would be thinking is possible is something like this. So in this up leg, you may not take out the previous high, you may just make it up top here, and up you go, nicely, slowly flattening out a little bit, and then a moderated easing and then you could continue to get the structure I've illustrated in the red. That could roll out until February, March, April next year. Let's just enjoy the leverage move for now on the leverage side, and remember that we are buying long term at investment level from profits made in trading, 1-to-1 with no margin, that are held long term for the great economic failure that is coming. And we are accumulating trading profits in our moderate margin and our high margin options. You can get up to 100 leverage in a very stable European country. So I just checking the SCM, Scandinavian Capital Markets, safe as a Volvo in Sweden, but outside of the EU margin restraints. And you can trade at these key moments with higher leverage and gain better results. Anyway, a big thank you for following the channel. Thank you for sharing and liking and helping develop it. I appreciate that. And as I say, as the audience grows, we can look at doing more and more things and covering more often. And if you want to be part of the community, book in and have a chat. We will be available for calls during the Christmas, New Year, and post early part of the New Year period when most people are still digesting Christmas pudding. Thank you for watching, and precious metals, make sure you're an acquirer. Bye for now.